Okay, folks, welcome to Best Stock Charts for the new trading week. This is Bob Desmond, and what we're going to talk about today is, how was our week last week? How did we do? Why are you listening to me? Why do I have any gravitas, as they like to say, in the political world? And we're going to talk about the positions that or the stocks we watched last week. We talked about last week. How did they do? And we'll talk about the new picks that we like for the new trading week. And those picks are RYAAY, COOP, Cooper, Mr. Cooper Group, Nucor, Zebra Technologies, RIF, what is that? RJF, Raymond James Financial, and Adobe, ADBE. So those are the names we're going to be talking about this week. We're going to do a follow-up again on the stocks we watched for last week. I'm going to give you a brief overview of my thoughts on this market. Members, if you want the detailed premium version of our strategy session, the week ahead commentary, that is already posted in the members area. If you want the premium version of Best Stock Charts for the new trading week, where we talk about entry points, exit points, stop loss points, price targets, etc., sign up for the 14-day free trial offer, link below, and you'll get that free. But what we're going to do today with these names is we're going to take a look at the macro view. Why do we like them? And then we'll talk strategy later on with members. Let's get to it. Okay, so it's all about holding the market in check. On Thursday night, Stock Charts Live, I mentioned that they had pumped up Microsoft on Thursday, along with Apple and Google. What was down for several days in a row? NVIDIA. NVIDIA has been carrying the market. So to keep the triple Qs up higher, what did they need to do with NVIDIA not participating? They had to take the laggards and bid them up. And they did that, not necessarily, Microsoft is not a laggard, but Apple certainly is. Tesla certainly is. Google certainly is. And to a certain extent, Amazon is as well. It has not broken out to new all-time highs with the rest of the market. So they did take Microsoft up. What did they do on Friday? They undercut Thursday's lows, if you could believe it. But I warned about what was going to happen on Friday. I said, watch out for Netflix. They are going to pump Netflix up. And sure enough, what did they do? Here's what I had to say on Thursday. So why do I say that Netflix is next to run? Simple. Let's pull back to a 4-hour chart. In orange, you have your Bollinger Bands. In beige, taupe, and off-white, perhaps even eggshell color, you have your Keltner channels. And right here, you saw a lot of compression build up, energy build up. It has now begun to release. So let me share my screen now and show you exactly what they did to Netflix on Friday morning. Take a look. They bid the shares up all the way up to 627.74 in the pre-market. The problem is that the market was just so weak and the economic data is so poor, it couldn't hold its mud. NVIDIA was down again. Microsoft was down. Netflix cannot carry the market by itself. It needed participation. And the fact that Microsoft did not follow through to the upside was probably a shocker to a lot of traders out there, because it should have. And even if it didn't, even if it traded sideways, if Apple kept up a couple of days of more upside movement, then you could have seen Netflix move up higher. You would have seen money rotate in there. You could have kept that rah-rah bullishness going. Unfortunately, Microsoft, what did it do on Friday afternoon or by Friday afternoon? Here was Thursday's rally, right? We cut through Thursday's rally like a hot knife through butter on Friday. So whenever you get a market that is breaking out and those breakouts fail amongst the leadership names, that means they're coming for the generals. That means that the market is under a lot of pressure. So we are short the market. We do have neutral trades on. I have a position on in Microsoft and Netflix, but they're options trades. They're neutral bets. I don't care which way Netflix goes or Microsoft goes. All I care about is time decay on those options that we sold. I just don't want them to crash. That's all. I don't want. That's not good for me. So Microsoft, the Qs are in trouble. big trouble. So members, I went over all of this strategy-wise in the week ahead commentary posted in the members area. Let's get to our stocks that we spoke about last week, one of which became a trade that we're still long of. So let's get to it. First chart up is Prologis. Now, this chart attempted a rally. It was rejected. It broke down. It's off of our list. This is another instance where you have a breakout of a top-tier quality stock. This is a good company. It broke out. It did a retest. Looked like it wanted to follow through to the upside. It was rejected. Not only was it rejected, it broke back down below not one support level, but two. Avoid like the plague. It is off of our watch list. First Energy weekly view. Now, it broke out the week prior to last. Now, this is a utility play. Very, very good company, but something that the markets did not anticipate happened last week, and that was the fact that the 10-year yield rallied. Utilities do not like strong yields. I won't go into that right now, the whys, but they don't like it. Sure enough, what happened on FE? Yeah, we made new weekly higher highs. We just couldn't hold it. The other chart that we spoke about last week was APA. That is Apache. We bought this stock. We're up on it by about 3% right now. And it attempted to break out. It was rejected. It was successful on a daily time frame in breaking out. Here you have it. But now we're fading a bit. So, and this was a Bollinger Band squeeze. And we're going to be talking more about these in a moment. This is the why behind we got involved with it. We had a Bollinger Band squeeze. And sure enough, it fired off to the long side. Does it hold it? We don't know. What I believe is happening right now in the market is that at a bare minimum, you're seeing sector rotation. At worst, if we see breakouts on Apache, on the energy stocks fail, that means it's probably going to be a broader base sell-off, and we're going to want to raise capital. So Apache we're long of right now. This time next week, we may not be. We don't want to give back our profits, so we're probably going to be stopping out if at a bare minimum if we break even on the trade. If we don't want to turn it into a loss, we don't want to turn a profit into a loss, right? That's the worst thing you could do. So Apache, ultimately still, I like it on a longer term time frame. Here is the trading range we've been in for quite some time. The longer the consolidation, the greater the validation of any breakout. Oil was up. There's a correlation between Apache and oil. So, and the energy stocks did very, very well. They're outperforming the S&P 500 right now. So right now we're going to stick with the trade. The other name that we like going into the new trading week was First Solar. Now, it did put in a new weekly higher high. We did not trade it, but by the end of the week, it flashed a bearish key reversal. So what do we do here? Nothing. It's off of our watch list at current. There's nothing to do here. So we look for other opportunities. Another name which we've been trading quite actively is Supermicro. Now, last week we had some very short-term options, Iron Condor. We closed out that trade. We rolled up puts a bunch of times, and I don't know if we rolled down calls. I don't think we did. And we had some really quick hits there, profitable. We still have a trade on in our smaller portfolio, longer term. But right now, those options should be set to expire prior to their earnings, so that their earnings are after 4/19. Our options are scheduled to expire on 4/19. We should be out probably within 21 days of expiration. So now going into the names that we like for the new trading week. Anybody that's traveled to Europe knows this company, Ryanair Holdings, a great little airline. It's like the taxi cab of Europe. For airlines anyway. I flew from Paris to Florence. Great flight. Loved the product. And we broke out last week. I want to see a filling of the gap. This is another Bollinger Band squeeze. What is that? Bollinger Band squeeze in black. Trading inside the Keltner channels in gray. We have a breakout here. We're looking for a setup. We don't have it yet. I'll be going over the setup in a moment on the premium version. If you're not currently a member, sign up for the 14-day free trial offer. Link below. Mr. Cooper. Mr. Cooper is an exposure play to copper. What is copper doing? Well, copper is breaking out. So we like Mr. Copper Group. And this is brought to my attention by one of our members, Franklin. And we broke out on Friday. We're going to be looking to put a trade on here this coming week. And again, we have a Bollinger Band squeeze. We have Bollinger Bands trading with inside the Keltner channels. A lot of energy getting pent up and set to be released. It's already begun. More to come on this one in a moment. Zebra Technologies. Daily chart. We have a breakout above the upper band of resistance, and we close there. This is a bull flag setup. It's a continuation breakout pattern. We like it for the longer term. When I mean longer term, in my world, that's like a few weeks, maybe. So Zebra Technology is looking good for a trade. One that hasn't been on our list for quite some time is Nucor daily chart. Again, we have another Bollinger Band squeeze. Bollinger Bands trading with inside the Keltner channels. That energy was released on Friday to the upside, and it looks as though we have more higher highs to go. Look at the volume on Friday, looking the bomb. Like Nucor quite a bit. These are commodity trades. Note, I only have, at current, one so far technology trade. We're going to go with another one in a moment, but that's Adobe. It's been beaten up already. The other one that I like is a financial, Raymond James Financial. And daily chart, we broke out on Friday. And it looks as though we are going to press up higher. Now, the caveat here is that what we're betting on is that we have sector rotation out of technology into other names. That may not happen. Many of these trades that I'm talking about right now, these breakouts, which look great right now, this time next week, maybe looking back and say, wow, they didn't pan out. They failed. They broke down. And whenever you see that, you see a trend developing like that, it's best to raise cash. And you don't want to see high quality stocks with beautiful setups failing. That usually means that the rest of the market is ready to go south as well. So the last chart we want to talk about here is Adobe. And Adobe, the reason why I like it, it's already reported earnings, and it's been beaten up quite a bit. I think that it can go lower. I really don't care if it goes lower or not. It's going to be an options trade because we want to be sellers of the options, not the buyers of the options. We want to be the casino and not the gambler. So you can see that the shares were beaten up on forward-looking guidance out of their earnings call. Now, the reason why I still like this as a trade is that the IV rank is still okay. It's beaten up. This is one where I'd want to open up an iron condor, maybe a strangle. And basically, an iron condor is a strangle, but with an insurance policy, also known as wings. And we're going to look to generate cash flow off of this. And that's what we like to do here is generate cash flow along with doing swing trades to, I don't care, long, short, doesn't matter to me. So these are the stocks that we like going into the new trading week. So members, let's talk about our strategy for these names. And we're going to talk a little bit about correlations between copper and Mr. Copper Group. So let's get to it. Why do correlations between the company and the commodity matter? It matters because, and that's it, folks. Thanks for being here. I'll catch you on Sunday Night Futures Live. Till then, have an awesome weekend. And happy St. Paddy's Day. Tip a pint from me. I'll talk to you soon.